Well, hello traders. I'm Orlando for Tradimo, and welcome to the Daily Edge, our first ever Daily Edge. I'm excited. I am excited. So I'm gonna be back in about 2 minutes. I'm just gonna leave some moments, or just gonna take a couple of minutes to invite some people and let other traders in. But yeah, I'll leave you with some good music. This is what I use to see you in 2 minutes. All right, everybody, I am back. And as I said before, I'm very excited about today because today is our first ever Daily Ed show. It's been a struggle for the past couple of weeks, actually, a couple of months. I've been trying to go live, but sadly, where I am from, where I'm located right now, the internet is capped to the to well, it's capped for upload speed, which is what's most important when streaming. But I finally figured out how to do it, and we're going to be starting again, guys. If you have any question, just There's the chat. This is the YouTube live stream. So yeah, just post your questions on the chat, and I'll get to them in a little bit. I'm going to start by looking at the US dollar currency index and my levels. So for the past week, the US dollar currency index was in this horrible, in this horrible range, all right? And finally, we broke to the upside. And the level that we are looking for is the 98.80 level, which is the previous highs right here. And we do expect a continuation higher just because of the bullish structure that we are in. We made a higher high, a higher low, higher high, a higher low, and we do expect a higher high on the DXY. So if we go to the daily chart, we're going to look at some levels to the upside. So the main level, this is the 1 hour chart, I'm sorry. Let's go to the daily chart. And as you can see, for a while, the level that we needed to break was the 97.70 level, these highs right here. And we actually did break it a couple of times, but this was a fake out in my opinion, and this was a fake out in my opinion. This was a clear break, but when we hit the 98.80 level, we crashed back down. Yeah, so basically the 98.80 level, 99 level is the one that I'm looking for a continuation higher. In any case, we are bullish the US dollar, technically speaking, for a bullish bearish line. Let me just get rid of this. For a bullish or bearish line, are these are the 97.20. Let me just modify the coordinates to a correctly round number. The 97.20 level is actually my actual short-term bull bear line. And the reason this is my actual short-term bull bear line, because we do have if we break with the white bullish structure, but we bounce off the 97.50 level, which means that if we actually make a higher, or if we test the 98.80 level and we break with this white bullish structure but test the 97.50 level again, for me we would still be in a bullish structure, much like what happened when we were testing again and again and again the 97.70 level. So to me, the level to break to the upside is the 98.80 level, and to the downside is the 97.50 level. Because if we break the 97.20 to 97 level, this entire zone right here, we would, in my opinion, be in an immediate bear market on the US dollar, because we would be making a lower low, which would mean that after making higher highs, higher lows, and retesting that 98.80 level again, we would be in fact breaking with this low right here. But for the time being, we remain bullish on the US dollar. It's been quiet, a quiet week. Let me show you on the Euro US dollar. And this is the main reason that we always look at the US dollar currency index here at Tradimo, because for me the dollar is king, right? You cannot trade currencies, or you cannot try to trade currencies if you don't look at the US dollar and find directionality on the US dollar. Because if you look closely what happened here, and I'm going to give you an example what happened here. Let me just get rid of that volume because that's premium. That's some premium stuff. What happened here is that while the DXY, or the US dollar currency index, was in that very narrow range, was chopping that narrow range, well, the euro versus the US dollar was doing the same thing. Okay, this currency pair is driven by price action on the US dollar. And when the US dollar broke to the upside, well, of course, the euro versus the US dollar broke to the downside. That is, I mean, it's as simple as that. Uh, you need to follow the US dollar to find directionality on, well, on your currency pairs. Let's extend this line and let's look at the euro versus the US dollar and the levels that I'm looking at. Well, we actually went short right here, but sadly got stopped out. I'm going to show you what we exactly did. When we were trading inside of this triangle and we were looking at this wide structure, bearish structure, we went short at the breakout of the triangle. Sadly, we got stopped out because the US dollar was chopping and had faked out to the upside. I'm going to show you what happened here. This little fake out was the one that turned us into a losing trade on the euro US dollar. But that's fine. With complete and good risk management rules and a good risk management system, you are always going to be profitable in the long term if you did the homework on your setups and you know the math behind them. So basically, right now, the level that I'm looking at, the euro US dollar, is the the 1020 level. I'm sorry, which is the previous lows right here. And once we get here, once we get here, I'm going to be looking for a possible buy opportunity, a short-term buy opportunity from the lows to the previous broken level, which is this one right here. And the reason is that we are still, well, the reason that I'm going to buy while still in the a down move is because I'm going to be playing an excellent risk to reward scenario on a pullback. All right, so basically the risk reward on these trades is going to be very good. If I do it in my head, it's going to be around 1 to 5 risk to reward scenario. Here, this very choppy zone, high volume zone, is where I'm going to try to be taking some profits. But in any case, I don't know what's going to happen when we hit the 1020 level. We might just, if the US dollar rallies next week, we're going to see this level crash and burn. Buyers are not going to be able to hold it. If we go to the daily chart, then let's look at some. It looks very and extremely bearish in my eyes. The daily on the euro US dollar. But again, I'm going to be waiting for that 20 or that 1020 level next week. For the time being, I remain short. I remain flat on this currency pair. Let's have a look at the pound versus the US dollar. But because the pound versus the US dollar, before we do, let's have a look at the chat. If we have any questions or some, let me just get my device to look at the chat. I'll be right back in less than a minute. All right, traders, I'm back. Let me just watch the chat. No questions for the time being at the moment. That's fine. So what we're going to be doing is continuing with the analysis, right? So the pound versus the US dollar is it's behaving very bullish in my opinion, even though we are in a very, very good, very strong bearish move. We are testing some key levels at the moment, okay? Now, let's thicken this chart out and let's have a look at what to expect right now. So let me just get rid of this line and let's continue. We broke to the upside. I mean, we faked out. We faked below the 121 level, and we traded below the 121 level actually, and well, we faked out of the 121 level right here, and we started to chop below it before going higher. All right. Now, what I'm looking at right now is a clear break to the upside from this structure. All right. Now, let's get rid of this triangle right here, because the actual structure that I'm looking at is this one. All right. Now, let's get rid of the extended line and let's continue. So basically what we did here, guys, very interesting, because we've been testing this structure quite some times. Here's the first test, and then when we broke above the 121 level again, we tested it, then broke to the upside again, retested, and now I think buyers are stepping in. But for me, the key level that we need to break is this one right here, around the 2180 level. All right. If you are already long in the pound versus the US dollar from the retest right here, more power to you, because that was a great risk to reward scenario for a break. For a short term to medium term pullback to maybe the 124 level, which would make for a nice it would make for an awesome risk to reward trade. And you will be actually risking, let's calculate it, what shall we? You will actually be risking 100 pips in order to make 300 pips. So that's a great 1 to 3 risk to reward scenario that do not come as often as you might think. Okay, so again, this is summer trading. Be careful and be patient with your positions. If you're already long, good for you. If you are not, this is not a signal, a trade signal. This is just analysis. I am not in any case pointing out to a possible trade. I'm just looking at the possible scenario. Okay, so that's the pound versus the US dollar. And let's move on and let's look at gold. All right, because gold, I mean, even though it's been quite a quiet summer trading. All right, it's been a quiet summer trading. We are, gold has been moving very nicely to the upside. Actually, if you don't know, if you are not a premium member, or if you are a premium member but just joined in, you might not know, but we actually bought gold around this. Just take a look at that risk to reward scenario. We bought gold right here at this break with the stop loss below, and we have been taking profits all along, right? Here once, here twice, and then we are still riding this long position in gold. That's just imagine the risk versus the reward scenario, and we have taken profits twice already on that position. But right now, what I'm looking at is a possible pullback in gold. So because we trade with CFDs, we can hedge on the same instrument, and that's why I am looking at a possible pullback in gold. So basically, we are still in an up move. Okay, let me just change to some horizontal, to some drawing lines. We are still in a very strong up move, but we are hitting some very, very key levels to the upside. Okay, and these levels that we are hitting right now, let me just show you the levels that I have in red right now. And the reason that I have these levels in red is because, well, you're going to see, if you keep joining the daily edge, you're going to see the way that I analyze the charts and the way that I draw my lines. I don't use horizontal lines. I hate using horizontal lines, and the reason that I don't use horizontal lines is because if I use horizontal lines, the line is going to be extended to the left too. So I only use, I use rays that are extended to the right only, because I like to see where the level, or I like to see where the level that I'm looking at began. For example, if I'm looking at the 1403 line, green line right here, this one right here, I know by going to the left, this is where the level started. So key level for me, the beginning of this wedge kind of formation. All right. Now, let me show you, because I mean, this is the first one. This is the first daily edge. I'm going to be, well, I have to show you these levels that I'm looking at. So we're going to the weekly chart, guys. I know it's a lot, but because of this, because of this huge bullish move, we have been breaking with key levels all along that I mean, they're not pointed out on my chart anymore, but I'm going to show you right now. I mean, we have been breaking with key levels. We broke with this one, we broke with this one, we broke with this one, and we broke with this one. And now we are we already broke with the first red line, all right, the 1485. But the reason that I have it on my chart is because it is a big level or a big base, all right? Now, what I mean by base is a past or a historic level where support was found, all right? If you look closely here, we broke to the upside, and right here we found support before moving all the way up to the 1920 level. So when we broke right here, or the past week, I think, if I'm not mistaken, with that level, I'm still going to be using it because we might test it as support. And now the level, the 1530 level, that is massive in my opinion, is this base right here. I mean, this base held for a long time, since September 2011 until July 2012. So that's a big level to the upside that we are testing as resistance. So let's go back to the 4-hour chart and let's have a look at what's going on. So basically, I am looking for a 1530 level that I already pointed out, and not only that, but also the possible rally in the US dollar. All right, if the US dollar rallies, then gold is going to dip. So and if you look closely here at the 1485 level, we already tested it as support. And after we test that, I mean, this is why I love working with key levels, because they work. I mean, I don't know how people trade without looking at key levels. I've seen a ton of very simple trading method. I mean, and trading should be simple and should be made simple, but you can't trade without key levels. Just look at what happened when we hit that 1530 level. Bam! Sellers immediately brought price in gold to the 1485, where buyers were found. All right, so key levels do work, and it is because of key levels that you know where to take profits. Okay, now let's go to the chat to see if we have any questions. All right, there are no questions at the moment. There are no questions at the moment. All right, so let's continue. Let's continue and look at key levels. Okay, I'm going to look at some crypto charts later after gold. Yeah, let's look at some Bitcoin. So yeah, basically a short-term short in gold because of the key level at the 1530 level, which is the big base that we saw that lasted from September 2011 to around July 2012, right? If we break with this wedge formation, right? If we break with the wedge formation, yeah, I would definitely be taking profit again here at the 1485 level. And if we break with that level, I will be looking at the 1428, maybe the 1403, which is this. I'm sorry, this entire uh, thick area. Okay, so those are my thoughts in gold on gold. I'm sorry. Again, that is if we continue to rally in the US dollar. So let's go and have a look at Bitcoin. I haven't looked at a chart in Bitcoin for a while. So yeah, I'm going to grab this US dollar Mexican peso. That was a great trade that we took this week, right? Boom. Profits within the day, 185 pips on the US dollar Mexican peso. And that zone, I mean, if you don't look at the at exotic pairs, I really recommend that you do, because I mean when they move fast, and they hit your targets very fast, and the levels and the key levels, because there's less volume in them, key levels are more likely to hold. You know, for example, here. Key level between the 1970 to the 1977 level. Boom. Sellers. Oops. Sellers. And sellers once again. So again, if you don't look at exotics, I sure recommend you do. We do at, I do actually look at them. US dollar Mexican peso, US dollars South African rand, etc. But right now, we have a request for Bitcoin. Let's see. Bitcoin US dollar. So Bitcoin US dollar. As you can see, I have zero key levels on Bitcoin. But don't worry, we're going to do this together. Okay, that's fine. If that's fine by you, I am going to be doing this with you right now. And again, I'm going to the leverage that I use. You can find brokers with 1 to 900 leverage, but I'm never going to be using more than 1 to I don't know, 20 leverage anytime. I never risk more than 1% of my equity in one single trade. Okay. And I never risk more than 1% of my equity in one single trade, and I also always look for at least a 1 to 2 to 2.5 risk to reward ratio, which means that even if I lose half of my trades, I'm going to be profitable in the long run. And that's the math behind trading. Trading is not about knowing where price is going to go, or boosting your ego because you're right. No, leave that shit on the at the door. That doesn't work. Trading is all about math and probabilities. Of course, you need to understand global macro trends and where where currencies are going. You need to, if you trade currencies, you need to understand monetary policy decisions and what they mean, and what that is going to do with certain currencies. Because if we are in I don't know, if we are in a round of QE, you're not going to be buying the US dollar, etc. Okay, but apart from that, if you base your decision solely on technicals, it's all about math and probabilities, and making the optimal decisions. Okay, and never over leverage yourself. So let's have a look at Bitcoin. All right. Yeah, there's someone that's called Pure Mathematics on the chat. I think he agrees with me. All right, let's do it. Let's have a look at Bitcoin. The first, let me just change the color of these lines, because I don't think that you're going to be, they're not going to be very visible to you. So I'm going to dot them. And of course, if you want a brighter color, just tell me, guys. That's completely fine. So this is the 60-minute chart. This is, to me, this is the shortest time frame that I'm going to be looking at. Maybe sometimes I'm going to be looking at the 15-minute chart, but just for entries, you know, to get a better risk to reward scenario. But mainly I'm going to be looking at the 1 hour to 4 hour chart. Yeah, so but let's have a look at the 4 hour chart because I want to look, I want to see some levels to the downside. All right, so this is the chart of in Bitcoin. We do have some big support here at around 94. 94. That's right, 94. And if you look closely, I mean, we haven't quite gotten yet. To me, this looks like a premature buy because we might. I mean, this is a magnet, yeah, a magnet base. For me, this is a premature buy, but let's continue. Just looking for let's look for some key levels. All right. Now this is another one that I will be very interested to see what happens with. I don't know what you guys think. Well, for example, I don't know if you guys look for key levels yourselves, like I do, but once I have something like this, you know, a key level, but price has chopped around it, to me that level is not as important anymore. For example, like this one right here, this key base. All right, let's go to a 1 hour chart, and I'm going to show you why I chose this level. All right, now if you look closely right here, let me just thicken the chart out for you. Now if you look closely, this is where we had a breakout, a retest before going higher. So yeah, to me this is a very key level because one, I mean, just look at price action, guys. Just look at price action. We had a rally all the way up here, boom, profit taken, and then exhaustion. All right. After that, we had exhaustion, and then buyers jumped in, and buyers jumped in again before going higher. So to me, this is a key level. A key level to me is defined as a level where buyers or sellers were found in the past. So if we go back to the 1 hour chart, which is this one right here, you can see that this is where sellers have been found lately. And in my opinion, like I said before, we haven't had a true test of that 94 level. 94 to 9380 level. So we might be retesting this level again for a continuation lower. Now, to be completely honest with you guys, cryptocurrencies are not my forte. This means that I don't trade them that often. I do trade Bitcoin and Ethereum, but I don't trade them as often as currencies, you know, or forex. Gold and forex is about 95% of my volume. But I do trade from time to time equities, crude oil, and cryptocurrencies. So right now we are in no man's land, okay? In Bitcoin. What I would do, or what I'm going to do, and thanks for pointing this out, is maybe there's two scenarios, and I'm going to put them out. We can continue this rally for a retest of the 1090 level or 1039 level, where I will be looking for a possible short opportunity for a real retest of the 9780 to 94 level. All right, or let me just get rid of what I just drew. I'm sorry. Or we could I'm sorry, I needed a brush. Or this could be actually a bullish flag and just a continuation pattern for a retest. If this is the scenario, I would not be trying to sell here in no man's land, but I am going to be trying to look for a short opportunity if we retest this broken level right here. So yeah, that's my short-term view on Bitcoin. And let's go back to the 4-hour chart to have a larger view in this cryptocurrency. Okay, now. So right here is where I would be, or I am going to be looking for long-term longs. All right here, because here is where true buyers were found historically. So again, I think that this is quite premature, and that we might be retesting this level, which is actually now my buy zone, and this is where big buyers are going to be jumping in the market. Now, if we look at historic price action, and we take this level right here, you're going to see that this is the actual level that we are looking at right now. So let's get rid of these two lines just for now, and let's have a look at what we are working with. So we are working with these highs, and we are working with these lows. All right. So again, this is the buy zone that I pointed out earlier, and I do think that this is a great zone to buy this cryptocurrency. And if it wasn't for you, I probably wouldn't be looking at this. So again, thank you. And that's the great thing about trading. About doing this with you guys, because sometimes I can't look at all the markets all the time, So when you point out something that you want me to look at, I might find some great opportunities that if it wasn't for you, I wouldn't have found. All right, so that's my thoughts on Bitcoin. I don't know if you agree with me or not, but right now, a possible short around the 1040 level, and a clear buy here. I would take this buy opportunity any single time. This is my buy zone. So let's have a look at where the S&P 500 is trading right now. But just if you bear with me, I am going to. I have to. My teapot is hot right now, so let me just pour myself a tea, and I will be right back in about 2 minutes. All right, traders, I'm back. Let's have a look at the E-Mini. All right. Let's have a look at the E-Mini S&P 500. So this is the E-Mini S&P 500 4-hour chart. I know that looking at the 4-hour chart in the E-Mini is, for most people, even for me, it's absurd. Because most traders, they trade this contract. But as you can see, I don't have any levels. But I do want to point out this right here. That was such a missed opportunity earlier this week. Oh my God! This was a textbook short setup on the E-Mini that I completely missed. But sometimes you are going to miss trades, and there's nothing you can do about it. other than cry. No, I'm joking. Of course not. But I mean, other than I mean, stay alert. Again, uh, missed opportunity, and not only for me. I know a lot of traders that missed this. Just look at this great risk versus reward on the spoos. All right, so let's have a look at the hourly. All right, at the hourly, but before we do, let's put on some levels. Let's look at the hourly and where it's trading right now. Okay, so a big bearish move uh, from the 2930 level, 2930 to 2935 level. Big bearish move to the downside. Of course, buyers were found at the 2835 level, which is the previous lows, and of course a big uh, bearish target. And again, we have been chopping, and now we traded up a little bit. Again, to me, this move to the upside, this late move to the upside is clearly very um, not strong enough to be a complete reversal. And if you look at this key level right here, let's just color it differently because we are in a different time frame. I just like to keep my lines visibly. I mean, when I look at a chart, I want to look where the levels are. I mean, and where the different colors on the levels help me to understand which levels are the strongest levels and which levels are the weakest levels. You know, the hourly levels, the 15-minute levels are weaker levels than the 4-hour to the daily levels. So yeah, I color them differently. Visibly, it helps me. You should do too. So right now, interesting. This is so interesting because this looks like the same setup that we looked at right here. All right, but stronger. Just take a look. We are retesting this very strong base. Okay, just look at this. This is where sellers gave up and big buyers jumped in. So this is a level that is going to be that sellers are going to be protecting. Okay, now again, let's go to a 15-minute chart to see the actual price action of today. Again, if you look at it, if you look at what's going on right here, we have the highs at around 28.78.75 and the lows at around 28.72. So if we stay trading in this range, of course, and it's obvious that there's no direction. But, and this is a big but, if we break to the downside, we have a great risk to reward scenario. This would be our risk, and our possible reward would be this. So for the first part of our position, of course, that I would be looking for a retest of the 28.35 level. Maybe not today, but who knows? Okay, who knows? But in my eyes, this looks bearish if we trade below the 28.72, and if we trade above the 28.78.50, this is going to get a more bullish look than we have right now. But a very interesting level that we found on the spoos right here. Super tradable, and I would take that setup any day. But again, the setup is not completely developed for the time being. But this is what I'm looking at before New York opens. And again, I'm Orlando for Tradimo, guys. I'm going to be doing this every single day. Every single day I will be live at this. I'm sorry. I will be live. I'm sorry. I will be live every day. I'm sorry. I was looking at the chat. I'm sorry. I will be live every day at around 1 p.m. At around noon to 1 p.m. Central Eastern Summertime, and about an hour before the New York session opens. Uh, if you want to get notified every single time that I go live, just subscribe to this channel and hit the notification bell, and you are always going to get notified when I go live. And if you're not a premium member, I left you a link below where you can get a 50% discount to our premium membership to get all of my analysis, my volume analysis, global macro trends, and my trade ideas. All right, so I'll see you guys tomorrow. I'll see you tomorrow, guys. I'm sorry, and it was great. It was a great first session. Goodbye.